With the new year just around the corner, it's time to start thinking about how you can make the most of the upcoming year. One of the best ways to do this is by investing in index funds, which offer the potential for high returns with minimal risk. In this video, we'll look at the top index funds to invest in for 2023 and provide some tips for successful investing. Let's get started. Understanding index funds is key to making wise investments for 2023. They are a type of mutual fund that generally provides a low-cost, diversified way to invest in the stock market. Index funds are made up of a wide variety of stocks or bonds and act like a barometer for the market. Investing in a selection of assets such as stocks, bonds, and common index funds is passively managed, meaning the investor relies on a predetermined set of securities to follow an index such as the S&P 500, and their performance corresponds to their portfolio's performance. Investing in index funds is a great way to diversify your investments and limit risk. For 2023, some of the best index funds to look at investing are in the NASDAQ 100, the MSCI Emerging Markets Index, and the Dow Jones U.S. Total Stock Market Index. Investors should consider their time horizon and personal preference when deciding on which index fund to choose. Different indexes offer different levels of risk and return potential, so it's important to find one that fits your long-term goals. Additionally, when looking for the best index fund to invest in for 2023, it's important to remember that everyone's situation is different. Whether an investor has a short or long-term time horizon or is more risk-averse, there are many index funds available to fit their need. After the trends of 2020 and 2021, now is the perfect time to get in on investing in index funds for 2023. There are several advantages to investing in index funds, including lower costs, broad diversification, and passive management. With index funds, you can invest in a variety of different stocks and sectors that make up the index, allowing you to diversify your investments. These funds track the performance of an index like the S&P 500 or NASDAQ, which are composed of some of the largest and most well-known companies in the world. This means you can invest with less volatility than individual stocks and spread your risk among many different companies. Plus, these funds have lower fees than actively managed mutual funds and require less effort to maintain investments in them. Considering these benefits and given the expected market performance for next year, it's important to do your research and find the best index funds for 2023. Start by looking at indexes that track major stock market indices such as the S&P 500 or NASDAQ Composite, or sector-specific indexes like those tracking energy stocks or technology stocks. Then look at factors like expense ratios and historical performance to help you determine which fund would be best suited to your goals and risk tolerance. Index funds are a great option for long-term financial growth as they provide a way to diversify investments and spread risk over a variety of different stocks, allowing investors to protect against market volatility. With that in mind, it's important to look toward these index funds to invest in for 2023. Researching different indices and their past performance is a must for any investor looking for success in the future. It can be helpful to focus on indices that have offered consistent returns over the years or those expected to perform well shortly. With careful consideration and planning, investors can make sound decisions when considering which index funds are the best to invest in for 2023. For investing in 2023, the best index funds to target are those that provide exposure to companies that have seen strong long-term growth potentials, such as technology and healthcare stocks. This will help ensure that investors can benefit from the continued growth of these industries over the next several years. Index funds provide exposure to a wide range of stocks rather than investing in a single stock or sector. They are often seen as the safest option as they spread the risk across multiple stocks. Investing in index funds for 2023 can be a wise decision as there are many opportunities to make significant returns. Some of the best index funds to invest in for 2023 include the S&P 500, NASDAQ 100, and FTSE 100. All three of these indices track the top stocks in their respective markets and provide the potential for considerable returns. Additionally, investing in index funds can be an incredibly cost-effective way to gain access to a variety of markets and sectors with minimal risk. Moreover, because index funds track an underlying index such as the S&P 500 or NASDAQ 100, they have lower fees than actively managed mutual funds and require less research effort than individual stocks. This makes them perfect for people who want to invest without having to spend hours researching and tracking investments on their own. Minimizing risk when investing in index funds means understanding the volatility of the fund and diversifying your portfolio. Look for funds that track a variety of markets and industries, rather than putting all your money into one fund. When looking for the best index funds to invest in for 2023, you want to look for funds that have a history of providing good returns. You also want to make sure to find funds that track several different markets and industries, as well as those that are low volatility and have a long track record of success. Taking the time to examine the options will help ensure that you are investing in the best index funds possible to maximize your returns while minimizing your risk. It's also important to consider the fees associated with each fund and understand how they could impact your return on investment. Look for funds with reasonable expenses that charge low or no commissions when buying or selling shares. Tracking and evaluating investment progress is essential for the success of any portfolio in 2023, as it allows investors to monitor the progress of their investments. Identify areas where improvements can be made and make adjustments accordingly. With this in mind, it's important to consider what the best index funds to invest in for 2023 are. A good place to start would be the S&P 500 and the DJIA, both of which have historically provided excellent returns for investors. Other indexes like NASDAQ 100, Russell 2000, and MSCI World are also good options for those looking to diversify their portfolio. Ultimately, it is important to carefully consider each index before selecting one that fits an individual's risk tolerance and time horizon. As always, do your research and consult a trusted financial advisor, as that can provide additional insight into which indexes may provide the most beneficial returns for your portfolio in 2023. It is important to track both short-term and long-term returns to get a comprehensive view of how each specific index fund has been performing over time. Additionally, tracking costs associated with each index can give insight into how much money was saved or lost as a result of the index findings. When looking for the best index fund to invest in for 2023, it's important to find an index fund with a good track record for providing reliable returns. Establishing benchmarks to compare performance against strengthens the ability to evaluate investment progress accurately. By setting benchmarks, investors can measure performance against their own goals and objectives, as well as compare it against other investments within their portfolio or in the market overall. Index funds are a great way to diversify your portfolio and increase returns with relatively low risk. By carefully researching market trends, analyzing historical data, and understanding the risks associated with each fund, you can find the right investments for your needs. Do your research and plan for 2023 to make the most of this investment opportunity. You like this video? Now give it a thumbs up and be sure to subscribe.